The number one question I get, the one causing the most anxiety, is about the exact topic today: sales tax on digital products. So what changed? Why is this suddenly a massive issue? I'm going to give you a simple step-by-step plan to figure out what you might owe and where. Let's demystify this entire mess together. Imagine opening your mail to a $10,000 tax bill. It's not from the IRS. It's from a state you've only ever flown over. One where you've never set foot, never rented an office, never hired a single person. This sounds like a bureaucratic nightmare, something that couldn't possibly be real. But for thousands of creators, artists, and online entrepreneurs selling digital products, this is a very real and very expensive new reality. That PDF guide you sell, that online course, that set of Lightroom presets, they could be creating a legal duty for you to collect and pay taxes in dozens of states you've barely even thought about. But don't panic. Seriously, take a deep breath. We're going to break down exactly why this is happening. I'm going to give you a simple step-by-step plan to figure out what you might owe and where, so you can get ahead of this and avoid those nasty, heart-stopping surprises from the taxman. Let's demystify this entire mess together. Who am I to be talking about this? My name is John Conrad, and I own Numeratus.us, a boutique white-glove concierge accounting firm designed to navigate the digital future in hyper-novel times. My whole world is helping creators and online business owners navigate the wild world of taxes. I've seen the good, the bad, and the ugly when it comes to self-employment and online sales. And lately, the number one question I get, the one causing the most anxiety, is about the exact topic today: sales tax on digital products. So what changed? Why is this suddenly a massive issue? The answer comes down to a single landmark event, a 2018 Supreme Court case called South Dakota versus Wayfair. For decades, the rule was straightforward. A state could only make you collect its sales tax if you had a physical presence there, an office, a warehouse, an employee, or even inventory stored in that state. If you were a creator in Arizona selling digital courses to someone in Georgia, Georgia couldn't touch you. No physical connection, no obligation. But e-commerce exploded. States watched billions of potential revenue slip away from online sales, while local shops had to charge tax on the same items. The old rule, rooted in a time of catalogs and mail order, had become a relic of the past, creating an imbalance where digital sellers operated freely while brick-and-mortar businesses carried the load. South Dakota challenged that directly. Their law said, even without physical presence, significant economic activity in the state created a tax obligation. The case went to the Supreme Court, and in a 5-4 decision, the court sided with South Dakota. They overturned the physical presence requirement, recognizing that in today's economy, a substantial connection, what we call a nexus, could arise from sales volume alone. In that moment, the old framework met its modern counterpart, and a new synthesis emerged: economic nexus. States now have the green light to require online sellers to collect tax based on their activity, not their location. The floodgates opened, and the rules of the game fundamentally shifted. I've used that legal-sounding word, nexus, a few times. It's the single most important concept here, so let's make it simple. Nexus is just a fancy term for a connection between your business and a state that's significant enough to create a tax obligation. If you have nexus in a state, then for tax purposes, you are in that state. The state sees you as part of its economy, and you must play by its sales tax rules. If you don't, you're an outsider, and the state can't force you to collect its tax. After Wayfair, there are two main ways to create nexus now. Let's talk about the old school connection, the physical nexus. This is the original type, the one that still applies today. You create it with any physical tie to a state, an office or storefront, employees or independent contractors working there, a warehouse you own or lease, but it also includes the less obvious traps that catch creators. Storing inventory. If you sell physical goods through Amazon, your inventory in warehouses across the country can trigger physical nexus in those states. attending a trade show. In some states, just marketing at a conference can create a temporary physical nexus. Having an affiliate. Some states recognize click-through nexus. An affiliate in the state referring customers for a commission can establish it. Physical nexus remains very real. If you have any of these, you have a duty to collect sales tax in that state, regardless of sales volume. Now we come to the new digital connection. Economic nexus. This is the game changer from Wayfair. It has nothing to do with where you are physically. It's based purely on your economic activity in the state. States set thresholds for sales revenue or transactions. Cross them, and you have economic nexus there. And here are the thresholds as of 2026. The most common, $100,000 in gross sales into that state, or 200 separate transactions, measured over the prior or current calendar year. Or is key. A $10 ebook seller can hit 200 transactions with just $2,000 in sales. Higher thresholds in some states like California, Texas, and New York at $500,000. New York requires $500,000 in total sales and 100 transactions. And versus or. Recent simplifications, states like Illinois, effective 2026, and Utah have dropped the transaction count, focusing solely on the $100,000 sales figure. 5 states have no statewide sales tax at all. Alaska, through some localities, have adopted remote seller rules. Delaware, Montana, New Hampshire, and Oregon, so you can largely ignore them for statewide obligations. This patchwork means you could have Nexus in a dozen states, but not a dozen others, all based on slightly different numbers. It's the new reality of selling online. Say you figured out you have economic nexus in 15 states, and you're not done. The next question is what I sell even taxable there? This is where it goes from complicated to maddening. There's no national standard for digital products. Each state decides its own rules, and they vary widely. States generally fall into 3 categories. Camp number 1, the clearly taxable states. These have updated laws to explicitly tax specific digital products, including digital downloads like ebooks, music, videos, and software, streaming services, software as a service. If customers log into your platform to use a tool, many states treat it as taxable. States like Washington and Maryland are expanding these definitions further. If you have Nexus here, you almost certainly need to collect tax on your digital products. Camp number 2, the clearly not taxable states. Some still primarily tax tangible personal property, physical items. Digital goods are often exempt here, though this group is shrinking as more states modernize their rules. Camp number 3, the it's complicated states. And this is most of them. This is the majority. Gray areas where taxability hinges on specifics. Downloads versus stream. Bundled with physical items. Canned software, which is pre-written, versus custom. In New York, custom might be a non-taxable service, but selling it to multiple clients makes it potentially taxable. Course format? Pre-recorded videos and PDFs are often taxable digital products, but live coaching or one-on-one elements might reclassify as non-taxable educational services. The lines are blurry and always shifting. Knowing Nexus isn't enough. You have to check the rules for your specific product in every state. I know this is a lot. It's confusing, overwhelming, and the last thing you want to do as a creative is pore over tax codes. To help, I've put together a community at Numeratus.org to help investors and entrepreneurs in the digital age learn, ask questions, and thrive as we navigate hyper-novelty. If you aren't ready to be a client of Numeratus's but need a coach, sign up at Numeratus.org for $100 a month and join a community of builders. We go over the duties of being the captain of your business, the language of business, tax optimization, crypto utilization, and a podcast, Odyssey, on the origin of rules, history, implications of business. The world is one large commercial enterprise. It's the first step to clarity and control. Now back to the video. Now we get the problem. Let's talk about solutions. Here's your step-by-step plan. Step number 1, determine where you have Nexus. Conduct a Nexus analysis. Physical, map your connections, employees, warehouses, trade shows, affiliates. Economic, pull reports from Stripe, PayPal, Shopify, or WooCommerce for sales revenue and transactions by customer state. Compare to each state's thresholds. Any crossed, add to your Nexus list. Number 2, Check if your product is taxable in those states. For each state on your list, start with the guide. Check the state's Department of Revenue site for remote sellers and digital product rules. Search for digital goods, educational services, or information services. If that's unclear, consult a tax pro specializing in this. The cost of guessing wrong is too high, or you could also give us a call at numeratus.us. Step number 3, register for a sales tax permit. In every state where you have Nexus and your product is taxable, register online with the Department of Revenue. They'll ask you your business details and where you first hit Nexus. That date matters. Back taxes, penalties, and interest can add up. Professional help here is invaluable. Number 4, collect the right amount of sales tax. Charge based on the buyer's location, not yours. Rates vary by county, city, and district, even within the same state. Don't do it manually. Use tools like TaxJar, Avalara, or built-in Shopify features, even Stripe. They calculate rooftop accurate rates and handle the rest once you tell them you're registered in those states. Step number 5, file your returns and remit the tax. File returns monthly, quarterly, or annually based on volume, showing sales, taxable amounts, and taxes collected. Of course, pay it over. This money was never yours. It's the state's. Automation via your tax software can file and remit it for you, saving hours. You might think, I sell on Etsy and Amazon. They handle this, right? Mostly, yes. Nearly every state now has marketplace facilitator laws. These shift the burden, collection, filing, everything from you to the platform for sales made through them. But there are traps. It doesn't apply to your own site. Etsy handles its sales. Your Shopify store is on you. Thresholds combine. Amazon sales, where they collect tax, can still push you over Nexus for your own site. Registration may still be needed. Some states require a permit even for marketplace-only sellers. Don't assume a platform is fully shielded for you. If you sell on your own site, do the full Nexus analysis. While we're here are a few more common creator pitfalls. Self-employment tax. As a self-employed person, you pay both Social Security and Medicare, 15.3% on your net profit for 2026. The 12.4% of Social Security portion applies to the first $184,000, and Medicare, 2.9%, has no cap. Quarterly estimated payments, no withholding? Pay the IRS in 4 installments on April 15th, June 15th, September 15th, and January 15th. Set aside 30% of your earnings to avoid underpayment penalties. Non-cash income? That brand sent laptop or sponsored trip, taxable at fair market value. A $2,000 camera given to you for a review and a piece of content is $2,000 of income. This was a firehouse of information. If you're overwhelmed, that's normal. This system is complex, frustrating, and built for a different era. But here's the key. The old physical rules created one kind of fairness. The digital boom demanded a reaction. And now, through Wayfair and Economic Nexus, we're seeing a synthesis, a modern framework where online sellers contribute to the economies they serve, and informed creators can thrive within it. Ignorance is not a defense here. States are ramping up audits, but you can take control. Start with Nexus analysis. That knowledge turns the monster into a manageable step. Use tools, automate what you can, and get pro help when needed. Numeratus understands this can save you far more than it costs in penalties, stress, and in time. If this conversation resonated with you and applies to your business, book a call with Numeratus at numeratus.us. You've built something real. Now protect it in the world as it is today.